Money Radio for a really great future. We're talking real money.
Ladies and gentlemen, thank you for joining us, but I hate to inform you that we're going to have to interrupt this edition of Talking Real Money for a special presentation. Ladies and gentlemen, welcome to What Do You Know? Featuring your host, Tom Cock.
I'm here. I'm trying to figure out what the heck's going on.
I played music and...
Oh, okay. As an interlude? Is it a break?
No,
is it tired of the talking thing?
No, it was a game show introduction. You know, for some reason, it goes fine over the air, but it doesn't come through to you for some reason.
Yeah, okay. Well, okay. You always sound great.
Yeah, I always sound. Anyway,
whether I can hear you or not. So, by the way, it's great to do the show with the great pumpkin. I mean, I'm looking across at this giant orange. Oh, okay.
This is my cell phone orange.
Ah, okay.
There's a football game today.
Oh, okay.
Not the one that you're thinking of, Seattle people.
Seattle is
I
crazy
care
right now.
very little about yours.
You should start caring more because the locals love it.
I know. I'm watching the game that goes before that game.
Yeah, I know.
Anyway,
so we're sorry to interrupt that by half an hour for you, but we'll hurry as fast as we can.
I was welcoming you to our preemptory game show.
Okay,
what do you know?
What do you know?
What do you know? Tom is going to ask you a series of questions that are going to test your knowledge of the markets and money.
And tell them what they've won, Don.
You've won almost nothing.
Okay. Well, no, actually, in this case, we can say nothing. That's official.
You want to give absolutely nothing.
Do you want to give them the phone number anyway? Because we want to take your calls.
Yes, and if you'd like to call in your questions, call us at 855-935-8255.
Okay, here is that
start
it? Ready to go?
It really didn't work out as I planned, but
had I known,
it was worth a shot. Anyway. Well, it was a last minute thing I put together. Literally at the last minute, I went, I can do this.
Yeah. So last year, 2025.
Yeah.
You remember all the headlines about the stock market being concentrated in the Magnificent Seven.
Uh-huh.
Yeah.
Magnificent Seven. Right, yes. So
yes. Here's the question.
The
Standard & Poor's 500. That's the 500 largest companies in the United States, returned 17.8% last year. Pretty good year. But what was the S&P 500's return without the Mag 7? Was it A, 10.3%, B, 1.3%, or C, a negative 1.3%? 10.1 or negative 1.3? He's contemplating it. He's considering using his landline now.
Yeah. Can I phone? No. Wait. I'm gonna.
Downstairs
okay.
And ask
wait.
Debbie. She'll know.
I'm gonna guess A. 10.3. Final answer.
Ding, 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 ding. You are correct.
Wait.
Sir.
Hold
well
on.
done.
I got a bell.
Oh, go hit it.
Is that it? Nope. That's not it. Nope. That's that. Nope. That's not it.
Hey. Oh.
There.
This is the worst run game show I've ever been a party to. I did one and I recorded at home when I was about 12 that was better than this.
I'm trying.
Well,
wait, did I get it right? Did I get it right?
You got it right.
Okay. All right.
There you go. So yes, without the Magnificent Seven, you only made 10.3% last year.
So you made 7% less.
By the way, we'll talk about another group of stocks that with those you did even better. But we'll get to that in a moment. Number two. You ready?
I'm ready.
You did well.
Okay.
Yeah, okay. In the last decade, the 10 years ending 12/31/2025, the Magnificent Seven, those seven wonderful companies.
Are we doing this
to
again?
Admire and love. That's a slightly different question.
Okay.
Made what percent in 10 years? Was it A, 200%, or B, 500%, or C, 999%?
I'm going to go with B, 500%.
500?
500. Final answer.
No.
Where's the wrong answer buzzer? There.
We need the electrode version
right.
where I hook you up.
There.
No, the last decade, actually, this is
What was the
number? 999% in 10 years. Yeah. That's a pretty remarkable run. By the way, it would have been nicer had they just made 1% more, because then even 1,000.
Yeah, that would have been 1,000.
Yeah.
All right.
That number comes to us, by the way, from Apollo Lupescu of Dimensional Funds. Thank you.
So I got one right, one wrong.
You got one right and one wrong. Okay, we ready for another one?
You better hurry because of the
clock. You gave the number, eh? 855-935-TALK
yes.
is our phone. Okay, here's the third one.
Okay.
What major asset returned nearly twice as much as U.S. stocks in 2025? Was it A, real estate, B, venture capital funds, or C, international stocks? Real estate, venture, or international?
I'm going to go with C, international funds. Final answer.
Hey, you got that one right, man. Woo, well done.
855-935-TALK is our phone number. Come play along with us. I don't know what we'll be playing, but we'll be playing something here on, what is the show called again? Oh, yeah, Talking Real Money.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
And here's the thing. We'd actually rather talk to you than even play What Do You Know? We, particularly as badly as we played it. So give us a call.
As badly as we performed it.
And
I mean, your
performed it.
answers have been pretty good. You're 2 out of 3. That's not bad.
855-935-TALK is our phone number. That's 855-935-8255. And we're going to stick around the Orlando area where I'm hanging out. By the way, that's this jersey I'm wearing.
Yeah.
Broncos jersey, number 13. That's my lucky number. So that's why I got it. Even though the quarterback, no one's going to remember, Trevor Siemian.
Oh, yeah. Household name for sure.
He was from Orlando.
4 or 5
He's
Super
from
Bowls.
Orlando.
Ah, very good.
Yeah.
Okay.
All right. So anyway,
Okay.
let's
Yeah.
go to Winter Park. It's a lovely part of Florida. Jillian, welcome to Talking Real Money.
Thank you. I listen to you guys all the time and love your show.
Thank you. What's up?
So I recently retired. I'm risk adverse. I have about 12% in equities. The rest is in fixed income. My mother passed away last year, and I had maybe over $500,000 sitting in money markets. So I put it all in SGOV, and then I realized it was such a tax drag that because I'm in the 22% tax bracket, I moved it to VTEB. And I'm wondering what you think about that.
I like it.
I'm not opposed. Good. I'm not opposed to, as the market goes down, or if it does at some point, not opposed to purchasing some VTI and just letting it.
Wait, so you're a market timer now.
Yeah,
You're
see,
a
that
timer.
makes you a market timer, Jillian.
Yeah.
You're a bad person.
And that you can't do. That's a game you can't play.
No.
One, VTI would be a mistake. If you were going to go into equities, it would be VT.
Yeah, because that would be the
but
global
Okay.
mix.
If you're going to go into equities, you go into equities because it's right for you, not because it's the right time.
But I think you're looking at this all wrong. Here's a way I would. When people tell us they're risk adverse, I never suggest. I even 10% in stocks. I don't even know if that's right, because what happens when that 10? Just hear me out. When that 10% goes down, here's how I would do it. I would run the numbers and see what kind of stock exposure you need. Maybe you don't need any.
That's
You
a
could
good
afford
point.
to just. You could just make
I really
3, 4,
don't.
5%.
I really
then 3,
don't
4,
need the
5%.
exposure. I'm just trying to preserve what I have.
Then why take risk you don't need to take? I mean, again, that's the thing. I mean, people are going to say, yeah, well, I'm losing to inflation. Okay, but you're sleeping at night. You're comfortable with what you're doing, and you're not worrying. So I think a lot of people think our job is to turn them into stock market investors. It certainly is not. And the market is a risky thing. It's a living, breathing organism that goes up and it goes down. So, Jillian, I mean, it may, again, I would run the numbers to see what sort of income you need off your portfolio, what sort of returns you have to sustain yourself for the rest of your life. And then that would be it. I would build the appropriate portfolio.
Okay, that's a great answer. I always felt that I just didn't want to watch it melt away as the dollar depreciated, and so I thought I needed to keep some in the market just to keep even.
Well, you may need to. You may need to. I don't know
to keep even with inflation.
That's a different topic.
Yeah, you kind of do.
And by the way, we should have mentioned what VTEB is. That is the Vanguard Municipal Bond Fund. So
Municipal Bond ETF.
Pardon me, ETF. That all the interest you get from that is not taxable. She was talking about how she was in SGOV. All the interest you get from that is taxable. So yes, I have seen cases where people are paying a lot in taxes. They don't have to. Now you're going to get a lower interest rate in VTEB than you are in SGOV.
It's like 3.4, and SGOV is the short. See, but
short term.
They're not. This is not an apples to apples comparison.
No, it is not. No,
because the bond, the tax-free bond fund is longer maturity bonds.
Mm-hmm. Yeah.
So you're going to get a higher relative after-tax return because you're taking more risk.
It's going to have some volatility.
Yeah. Although the SGOV, I think, is 4.2 and the VTEB is 3.4. So it's about the same.
Yeah.
On an after-tax basis, it's almost exactly the same amount of money in your pocket.
And as Don correctly points out, if you're risk averse, as you stated at the beginning, SGOV might make sense because VTEB is going to have a little bit of its ups and not a lot, not like stocks, but it's going to have some. I'll bet it lost money, for example, in 2022 because of the bonds that it holds.
It lost 8% in 2022.
Yeah, right. So you may look at that and say, "Hey, wait! You guys said I was going to be in bonds; they're never going to go down." Yeah, they sometimes go down too.
Right. I have BND as well, about 100,000, and so I just.
BND is going to behave similarly.
Yeah. I was trying to get it out of the big tax drag since it's in a brokerage account.
Yeah, but what Don is pointing out is there's
not any tax drag really because if you were above the 24% bracket, getting into the 30s, then municipals absolutely win. But in the 22% bracket, you may even at times be cutting off your nose to spite your face. You may be actually getting, I'm not paying taxes, but you're making less.
Yeah.
Right now it's about a wash.
Yeah. And my bigger picture take for you still is if you truly don't want any volatility, SGOV is going to be way better than VTEB. Way better.
And another thing, if you don't mind, you said you have this in a brokerage account, right?
Yes. It's at Fidelity.
At Fidelity. Check with Fidelity about doing a CD ladder. Consider a 5-year CD ladder. See if they have a tool that'll do that automatically. That will automatically reinvest the 1 year if you don't need it into a 5-year at the highest yields, because that's going to give you an even greater feeling of stability and better overall rates.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Welcome to the Talking Real Money radio show and then future podcast that will air a day later this week because of the holiday.
Of course, yes.
Because
don't get me going.
MLK Day.
Yes, I know.
855-935-TALK is our phone number. That's 855-935-8255. We've got a line open for you right now. It's so easy to call us, and we love taking your calls because if you don't call us, then we either play the game show or Tom reads questions. Which do you prefer doing right now?
I think we should keep with the questions, sir.
Wait, what questions from listeners or the game show?
Listener questions, as you know, always come first.
Okay. I just wanted
to
make sure.
My wife's priorities around the house
I wanted to make sure I knew where we were going, so hold on.
That's right.
Hold on. I got to get right back into my thing, okay?
Okay. Ladies and gentlemen, what do you know? And does it matter?
Yeah, no, it doesn't.
Yeah.
Okay.
Here we go.
What do you got? Go ahead.
All right. The Trump administration.
This is not political, is it?
Hold all applause till the end. Withdrew the United States from the Paris Global Climate Accord, ended tax credit for electric vehicles, and shut off subsidies for solar and wind power. In response, iShares Global Clean Energy ETF, which holds alternative energy stocks, either, here's the answers.
Okay. Yeah.
In 2025,
Yeah.
did it lose 4.6%? Did it lose 46.6%? Or did it gain 46.6%?
It's being weird. Oh, there we go. Okay.
And now he's thinking.
Lose, or gain. Lose a little,
Yes.
lose a lot, or gain.
Yes.
I am going to go with C. C is my final answer.
C is your final answer.
C is my final
Did
answer because I think I
alternative
know
energy
why.
stocks-
I think I know why.
Okay. Well, you'll be the only
I
one.
have
'cause
not
when
looked
I
at
read
the
it,
quiz.
I had no idea. You had not? No. This is right off the cuff, as you can tell by the rest
Yeah.
of the sound
Right.
effects and the like. You're correct, sir. It gained 46.6%.
Why? Let me explain why.
Please do.
Because the market anticipates. The market doesn't react.
Yeah, that's right.
And the market already built all of that in to the price.
Indeed it did.
And it doesn't. That's why people go, well, wait, the news was bad. Why did the market go
Yeah,
up? Because it anticipates. It anticipates.
That's right.
Thank you. You're welcome.
Well
Yes.
done and well deserved, I've got to say. So,
All right. You got any more?
yeah, I got more, but
I got
don't
a
know.
million of them.
I got more, but
Well, you
Really?
got time.
Really?
Do another one.
okay. This one, I think I already shared with you the answer, so maybe you'll know. But the best performing major stock market in the world in 2025 returned 112.03% last year. It was A, China, B, Colombia, or C, Spain.
Colombia or Spain? They're both Spanish speaking.
Yes,
There
they
may be
are.
a clue there.
No.
It's
Or
not,
maybe not.
It's not. Wait. Okay. Wait. It's not China. I'm going with Colombia. Final
And
answer.
you would again be correct, sir. Well done.
Thank
Can you
Thank
explain
you.
why it was Colombia?
I have no idea why it was Colombia because
Because it's right next door to Venezuela.
oh sure, that of course
Everybody knows
explains
that.
it perfectly. No,
It
it
does. No,
doesn't.
actually, here's the greater explanation. Because the last 2 weeks of the year, my son was there, apparently overspending.
Well, that
That
can do
must
it.
have been it. All
Yeah.
those American dollars spread around, and all of a
Deep-pocketed
sudden,
gringo.
the next thing you know, the market goes skyrocketing. I'm going to save one more question because it's a pretty tasty one, and you're going to really like it.
No, do
But
it
I'm going
now.
to hold on to. Okay.
You got to do it. You got to do it because
Bitcoin.
This is the half hour. We got to end it.
Yeah.
Okay, Bitcoin.
In
ready?
2025,
Yeah.
the U.S. dollar, as measured by the Wall Street Journal Dollar Index, fell 6.6%.
Mm-hmm.
In 2025, the CoinDesk Bitcoin Price Index, either A, fell 6.3%, B, rose 134.7%.
This was during
or C,
2025, correct?
2025
Okay.
rose 17.1%. The CoinDesk Bitcoin Price Index.
See, now I know it went down at the end of the year, but it also had a big increase in the middle there. So I'm going to say up. I'm going to go B. Final answer.
Your final answer?
Yeah, B.
Rose 134.7%. That's what you're saying?
I don't know. B. Yeah, I'm going with that.
You would be wrong there, sir. It fell 6.3%.
So it did go
in 2025.
down. Oh.
It did. Wait,
All right.
Bitcoin can go. It could go down.
Well, see, I knew it went up
That's
in the
a
middle of the
surprise.
year a lot. And
This
then it
was a
went
shocker
down
when
at
I
the
read
end.
it.
Okay.
And thank goodness for all of you, that was the last question. So that
Sorry,
in
Michael.
the scrap heap
Sorry,
of
Michael
history.
Saylor. That means you're having a little trouble, aren't you?
That's right. We're not going to talk about that story. It is unbelievable.
855-935-TALK. That's our number. Call us.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Hey, thanks for being part of Talking Real Money. We're going to get back to your calls in just a second. I want to close out the quiz segment by just saying the good news about that. If you didn't know the answer to any of those, you don't need to. In today's world, people expect us to know that, which, by the way,
Which
we
means
don't
it was
need
an
to
utter
know
waste
either.
of time.
Well, we don't need to know either, because the way we invest does not require us to know which market may be better or what's going to happen next year or what policy is going to affect what, because we're going to be diversified, we're going to be low cost, we're going to have the right balance between stocks and bonds, and that's it.
Wasn't it about the lesson, really, not about the data? the
I
information.
think you're
I
right.
think it was the lesson thing. 855-935-8255. That is the phone number you use on Saturdays to call us on the radio, on Northwest News Radio in Seattle when we do the show. And otherwise, you go to talkingrealmoney.com and you send your questions in. But let's go out to the capital of the United States of America. Ladies and gentlemen, Washington, District of Columbia. Chris, welcome to the program.
Hi. I consider you guys the gurus of financial advice.
Wow.
And
It's a lot of pressure.
I'm actually old. I'm actually older than Don, believe it or not.
No,
Nobody's
but he's older than Don.
I tried to get in ahead of you on that one. Yeah. Almost did.
Over the last 20 years, I started to lose my eyesight. So I wouldn't have to answer this question if I could look it up on the computer or whatever. But most of my investments over the years were made before ETFs came around.
Yeah.
Can you give me and the other listeners, I've heard a lot about ETFs, and you've mentioned certain ETFs, not specifically, but generically, that you should not get into. But what generally is the advantage of an ETF, and what allows them to deal with the money, the funds they have, differently that makes it a better choice than a traditional mutual fund?
Well, because of the way they're structured, they are not a portfolio of securities. They're more like a warehouse of securities.
Very good. They hand them from one person to another instead of selling them.
Yeah, they hand them out in the warehouse. Instead of making a transaction, they just move them to another guy in the warehouse. They just move it into his shelves from their shelves. And by doing that, they don't end up with a taxable event occurring. Either a
when
taxable
people want to sell out,
right?
Because people every day are wanting their money back, right?
Which means you, as the holder of an ETF share, even though they're making money internally buying and selling securities, you do not incur a tax on that until you sell your ETF shares. So they're much more tax efficient. They're also less expensive to maintain because there's less bookkeeping, there's less reporting. A mutual fund company is required every quarter to send you reports or make them available to you and prospectuses. You don't have to do all that with ETFs because ETFs trade like a stock.
And that's the good news. The bad news is thousands are being added every year. Most of them, by the way, it's a shocking number to me. Most of them are actively managed, and about a third of the new ones in 2025 were either A, leveraged, or B, single stock portfolios. These are not things you should be using or even thinking about.
He was asking about general ETFs.
No, but he was asking about the good, the bad, and the ugly about ETFs. But again, if I was starting my portfolio today, I would use exchange-traded funds. They would be diversified, and they'd be probably either index funds or from Avantis or dimensional funds. That would be it. I wouldn't select anybody else.
A couple of things, just real simple. It's transparency. ETFs publish their what they hold every day. As they change their portfolios. Mutual funds are quarterly. The capital gains thing, because you're not subject to the whims of some big investor in the fund who sells out and costs you a lot of money, like people see with mutual funds all the time. And you can always know any moment of a business day what that fund is worth, too. That's another advantage. And the fees are lower. There's the big ones. Generally, the fees are lower.
Yes. Go ahead, Chris.
Another question. Part of this. You said that they're a warehouse and they trade it or exchange it to another warehouse.
No, inside of the warehouse.
Yeah, they kind of stay in the warehouse. They just move it from their shelves in the warehouse to that other guy's shelves.
So the Tom Cox mutual fund assortment would just trade within the Tom Cox organization?
Or they would hand over the shares if they needed some liquidity. They would hand them over to the Don McDonald organization, and we would then give them some money but it's all happening behind the scenes, so there's no taxable event occurring.
Yeah. It's a better structure.
How did they get away with that then? How did
About
they get
30
away
years
with
ago,
it?
the government decided it was a good idea. That's how. I mean, so they brought it to them and said, let's try this. So, yeah.
Yeah. Right now, at this point, I'm just waiting for ETF conversions in the
Yep.
companies I
They're
have
coming.
money in. Well, you said that about a year ago, and I'm still waiting.
Which fund
Yeah.
company?
So, well, the bulk of our money that's taxable is with T. Rowe Price.
They're not in any hurry.
I've called.
Why would they?
them.
Because they're just going to make less money.
Yep.
Yeah.
Sadly.
I call them and they say somebody that's been there a long time say, well, this is the one question we get more every day. The number one question they get: when are we going to do? They're going to do ETF conversions.
Well, they're going to have to eventually. The pressure will be too great. But as Don said, they're going to drag their feet because they're going to go from making an average of 0.7 to an average of 0.4. I mean, what business wants to cut their prices that dramatically? Yeah. It's going to be less money to people.
Mm-hmm.
Okay. Well, keep up the good work. I love you guys.
All right. Thanks so
that
much,
is very
Chris.
kind.
We appreciate
That's
you.
very nice of you.
Take care.
Really do.
The trick is, the best way I can explain this is it's kind of a difference in the way the ETFs are plumbed. The plumbing is
right.
different.
Structure.
It's the way things flow. It's actually a legal cheat. They're legally cheating. It's allowed. It's a structural loophole that's completely legal, but it keeps you from incurring capital gains.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
And by the way, this bears mentioning. ETFs do not get you out of dividends.
No.
You will
it's simply the capital gains.
It's just
part.
the capital gains, and it's not 100%. For example,
no, it's not. Nope.
If an ETF liquidates completely,
correct.
The little ETF went out of business because it wasn't that good, and there are going to be a lot
more
of
those. Yeah, absolutely.
Then you could have a distributed capital gain, an involuntary capital gain. But not
it's just
very
they're better
often.
than mutual funds in a general sense. You're going to get a better tax deal.
Our phone number is 855-935-TALK, 855-935-8255. Let's go to Minneapolis, Minnesota, where Michael resides. Michael, welcome to the program.
Hello. I've been listening for a couple years. Figured I'd give you guys a call.
Thank you.
Thank you.
My question is, so I work in the public sector, and so I've had a couple jobs, and they've all been part of the same pension program. And obviously, things can change, but assuming I'm still in that plan, does it even make sense for me to have bonds or other fixed income items in a personal portfolio, like a Roth or a regular IRA?
That is a great question. It does come up from time to time.
A lot it
people
comes
say,
up, yeah.
I've got this pension.
I've got Social Security. Isn't that my bond fund?
Yeah. The short answer to that is it depends on you and your risk tolerance. Because you're right. At one level, you could say, well, I'll put it all in stocks because I've got this fixed income. I'm going to get it, fill in the blank age, 60, 65, whatever it is. And I'm okay seeing my stocks go up and down a lot. Or people like Jillian, we talked to earlier in the hour, said, I'm risk averse and I don't like seeing my money go down. So here's how I would view it. I would take, for example, the risk quiz, which is free at talkingrealmoney.com. That will help you understand your emotions around money. Then I would build the right portfolio. By the way, you mentioned something else that would concern me a little bit. I don't like the idea of bonds ever in Roth IRAs because Roth get tax-free treatment. So I wouldn't want to have them there. But that's a small thing. Again, I would try to figure out how much volatility I'm willing to accept, then build the right portfolio.
While Tom is absolutely right about it being right for you, I do not in general like the idea of conflating a pension or Social Security income with a bond, because that then implies that you own bonds just for the income.
I think that's right. Because one is an asset and one is an income. They're different things.
They're different things. You can't impute a bond value to a pension because we're not suggesting you own bonds to provide you with an income in retirement. Otherwise, we would tell you to get all out of your stocks when you retire and just own bonds and take an income from them, which we would not do because we think that would be, for most people, unless you're very risk-averse, foolish.
Does that make sense, Michael?
Okay. Yeah, that I see how you come to that.
So maybe you own bonds
Awesome.
if you need them for your peace of mind.
Sure.
Yeah, peace of mind. That's the right word. Words.
Okay.
Okay. Thank you.
You're very welcome. Thank you for calling us at 855-935-TALK, 855-935-8255. And by the way, you can do that on Saturdays. Call us at that number from noon to 2 Pacific time, 3 to 5 Eastern for those of you on the East Coast. You have to do the calculation in the middle. If you don't get with us on Saturday, then go to talkingrealmoney.com, and there's a button in the upper right corner that says Contact Us. And use that to speak a question to me. And by the way, I need some more.
Yeah, by the way, I listened to the podcast yesterday. I loved it. Of course, as you know, my grandson and I were driving to our little walk in the woods since it was a nice day yesterday. And you very kindly brought up a number that I found fascinating, because you said, if you're on margin at Schwab, you're paying, like 6%. I just looked it up. It's 10.
Oh,
the whole philosophy of because it was a guy who wanted to lever up and then take the dividend income.
Yeah, what a
the
silly
nutty
idea.
strategy. Yeah, but it's going to be more expensive anyway. So that was a small thing.
So what'd you think of the AI voice?
I loved it.
That was AI. That was not
scary.
me. That was me.
That was frightening.
I was answering the question by typing my answer. And the AI played the part of Don, and it sounded just like me.
It did really sound like you. So, yeah.
I mean, it's uncanny. It really was uncanny.
Truly.
So give us a call, 855-935-TALK, or send in your questions at talkingrealmoney.com. Do you have one right there? I think you do. I think I see a paper in your hand.
Pam wrote us from Marshall, Michigan. Hello, Don and Tom. Thank you for the great podcast. After listening to you, I can clearly see that I have a case of hodgepodge-itis.
A lot of us
with
do.
multiple 401ks at prior employers. But when it comes to rolling them over, I freeze out of fear that I will time the rollover poorly and or lose out on selling gains in funds owned years ago and buying at a new high in new funds in the current market. How do you recommend I do this? Should I first roll each investment into the money market hold fund within each plan, then roll over each fund to my brokerage? She says brokerage account, by the way, and I don't think
it will be an IRA with a broker is what she's talking about.
That's okay. Brokerage to me means a taxable account. So yes, it would be an IRA. Then reinvest the lump sum into my allocation plan, risk volatility in the process. In other words, is there a right time to sell the 401k and move it into another account?
See, we do this a lot. Human beings, we get too deep into these things. We're overthinking this. Right now, your 401k, I would assume, I'm going to make this assumption, that it's allocated according to your needs and risk tolerance. So all you do is create that exact same portfolio in your IRA, have the money moved over in kind, have your new custodian sell all of those assets and immediately move it into the similar assets.
There's going to be a lapse.
It's going to be a couple of days. Yeah. It's going to be a few days that will. But the reality is you'll be just moving sideways. It's a lateral move. You're not selling. You're not trying to time the market. You just move it as is, pretty much.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Because you need to understand how money really works. There are way too many people out there trying to mislead you about money. And I'm not saying we have all the answers, because we don't. We certainly have vested interests like every other human being on the planet. We run a business that's an investment advisory business, but we really, truly try not to sit around here all show long, every podcast, every radio show, and say, go to us, call us, we're the best. No, we try not to do that. We try to help everybody move forward financially in a better way that is more, that's in your favor, not ours.
Yeah, I think you can safely say, looking back over 30 plus years of each of our careers, that we have also committed to educating people.
Yeah, we
Truly,
really tried.
We tried to help. Yeah, we have. And as part of that, we do this annual event. It's big. It's just, and by the way, it's almost a third sold out already. Well, okay. I've never found one bigger. I'll put it that way.
Okay.
But
maybe
we sold it out every year in Bellevue. It's coming up on March 7th. It's called Retire Meet. You might have heard the ads that run on the live radio show. It's a great program. And not just because the two of Don will be coming out, I'm told, although I have yet to see the airplane reservation.
I haven't made it yet because we're still trying to figure out the dog watching thing.
Yeah, the dog watching thing is always critical. But because of the stature of the program and how well it's done, we get truly great speakers there. Truly great speakers there. People, Joe Saul Seahigh, who was the most popular, by the way, last year, according to the surveys. Paul Merriman, who's been around and doing this for a long time.
Joe Saul Seahigh was the most popular.
He was number one.
Oh.
Yeah. You know who number two was, of course.
It was you.
That was me.
Yeah.
Anyway, and Christine Benz from Morningstar, and we've got people coming from Dimensional Funds that are highly thought of. There's a lot of great people there that get up and help you and Kevin from Medicare. I mean, all the nuts and bolts of retirement. I think you'd gain something if you're, I don't know, within 10 years of retirement. We'll get younger people coming too, because we talk about investing and
absolutely
all that
something.
stuff. Yeah. So
absolutely.
it's a great deal. And here's the thing. I know I say this every year. It will sell out. And actually, in this case, it's going to sell out pretty soon.
Looks like a lot faster than we're used to. Yeah.
So it's going fast. So you simply go to retiremeet.com. It's relatively inexpensive. It includes lunch and breakfast and lunch. I think usually say breakfast first. And 2/3 of a day that you'll gain something from. So go to retiremeet.com. We'd love to see you there too, by the way.
Yeah, retiremeet.com, because they let MEAT go.
I know. I wish they hadn't.
I went to a lot of trouble to make sure that people who were thinking about a retiring butcher would.
You were chewing on that one for a long time.
I'm chewing on the fat.
Yeah, that's right. But apparently not well enough. So anyway, join us.
Got a little gristly. Yeah, do that. And here's some other information for you. Send us your questions anytime at talkingrealmoney.com on the contact form. You may type them, and Tom will get them and cut down a tree in your honor.
Tom's war on trees continues.
Otherwise, speak them, and Don will answer them on the Friday podcasts, except for occasionally when we do a Tom and Roxy
Q&A.
That's
coming up fast,
which is coming up because, and it turned out to be a good thing because I barely have enough questions for the last week of the month.
So start calling. Yeah. Do it.
So don't call. You go to talkingrealmoney.com and you click on the contact us form, and then you speak the question or you type the question. Okay? Thanks.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.